hitting the wrong buttons over here. Let me know if you guys can hear me in the chats. And we're going to get started in a little less than 2 minutes here. And we're going to roll into Bitcoin today. And we will, of course, take a look at Dixie, gold, traditional markets, and maybe a few viewer requests. But we have quite a few chats going and quite a few live streams going on right now. So if you can let me know across the various streams if you can hear me okay, that being YouTube, x.com, Twitch, and then the RDP stream going for those that cannot access those sites. All right, it seems that everybody can hear me okay. We're going to get the music under control and get this rolling. So we'll bring this down. And I got to pause it on my end. Hold on just a second. We're going to roll right into it. Hello and welcome to Landy's Crypto Corner. Today is January 24th, 2024, and this is a Market Madness Technical Analysis Wednesday live stream. We are going to be picking up with where we left off in the last live stream and yesterday's pre-recorded video staring at charts, Bitcoin on the 23rd, and we're just going to jump right into it. Bitcoin is still playing on the lows here. Excuse me. We can see that Bitcoin did come down and tag the lower second standard deviation, wicked through it in between the lower second and lower third zone here, and has popped back up to test in and around the lower first. It hasn't quite got there. That is coming in at 40,750 or so. We are seeing a shorter term time frame rejection off of that area. Not unexpected after the quick move off of the monthly. So let's go ahead and actually take a look at that. We can see that, we did see Bitcoin come down and tag the monthly. We had previously seen this area tagged as resistance before moving through and testing the weekly as resistance and eventually breaking out of that, and then heading up towards the next weekly zone, and then eventually the monthlies up here. So a retest of this area, absolutely not unexpected. We did talk about this area being front run last week, and then we saw the front run live on our live stream here on Monday. That was, I believe, this candle structure right here. We saw a little bit of accumulation sideways, and then a rollover into the monthly support. So the shorter term time frame front run did occur. It did occur on volume as well. So if we were to look at volume here, we can see that that front run came in on volume, sent price sideways. Price did dip down into that weekly monthly zone, then quickly recovered out of there. Now you'll note that as Bitcoin headed into that zone, there was some elevated volume. And in aggregate, it was more volume than what we saw on the rollover. But we didn't really see serious volume coming in until we got a weekly retest. So after Bitcoin broke above the weekly, it kind of played in and around that weekly close open level, back into the zone, and then double tapped on the weekly there at around $39,000. We saw significant volume coming in and kind of sent price up a little bit higher to get away from the weekly, went into a sideways consolidation, and now is headed back towards that weekly area. You can see that each time that it has spiked down to the bottom side of this range, we have seen volume coming in. And, I would suspect that we'll see some more volume coming in if Bitcoin heads back into this zone in the lower term timeframes. Now, if that area does break down, excuse me, it's been raining a lot here. If that area does break down, meaning the weekly and specifically the monthly here at 38.5, which, by the way, the monthly there at 38, it's technically 38,491, but 38.5 just to call it even. The wick low now is coming in at 38,501. If we do see a close below that monthly, that would be below the lower second and the wick low here, targeting the next weekly at 37.7 down to the weekly below it at 36.2 to 3. Now, anywhere in that zone is fair game at that point. If we did see that area break down, there is a monthly down here at $35,000 and that weekly below it at 34,750. For those of you that are here on a regular basis, you know all of this. But it does bear repeating because these are going to be significant levels of interest if Bitcoin does break down from the 38.5 monthly. Now, on the other side of that, if Bitcoin does recover the lower first standard deviation, right around that 40,800, you can mark price up, probably looking somewhere around 41.2 to 3 here at the close open lows, right? About 41.2 to 3. Above there, Bitcoin needs to recover this 41.8 weekly and then take out this local wick high structure at around 42,160 to go and test in and around that basis at 43,000 to the weekly just above it, 43.2. This is all bearish below this weekly, and specifically we need to see daily closures back above this wick high at around 43,570. So you can take 43.5 to 6 depending on your exchange as the area that needs to be closed above. If we do see closes above the weekly but that do not close above this wick high at 43.5 to 6, well, that would be a swing of this area and likely going to, would likely see price head back down. But if it does break above there, we would have a longer term time frame, in terms of not necessarily like a weekly or anything like that, but, daily and higher trend break. Now, technically on a swing chart, you can see that the trend break would actually occur on any closes above this high here that is coming in at around that 41,858. So basically a recovery of the weekly would break the swing high. It also would solidify this as a low. We do need to see closing lows coming in on closes above 41,560 or so. Right now, it's only set a swing low, and that will only be confirmed on closes above 40,150. So even though Bitcoin on a swing chart has put in the swing low to a, technically lower swing high right now, but the swing low for an SFP isn't even in until we see it close above, at minimum, that 40,150. If we do see that, then the next criteria would be getting above that basis at around 40,750 to 800. Take out this open from Monday around that 41,550, 560 area. That would then solidify the closing lows. You do want to see the swing high getting taken out at that 41.8 to 9 at the weekly. And then you want to see this area tested around 43 to 43.5 to 6 at this next swing high. Above there would also put it above the basis band, giving us the target of the upper first, which is coming in at 45,160. I would give it a zone around 45,000 to 45.5 because there's a monthly right there. And then above there, the upper second, of course, coming in at 47,350. And if we did see price run directly back to the upside of the bands, I would be looking for initial rejections. But price could very easily test the highs if it starts getting above the upper second in and around that monthly bear market swing high at 48,240 to the wick high at 49K by the upper third, which is now starting to come in just under $50,000 at 49,550. So fair game. If it did slingshot itself all the way through the bands to the other side, we have seen that before, so don't be surprised if it does happen, and also don't be surprised if it doesn't. What I would say is if we did see this come off the lows and come all the way back to the highs, whenever it does head back down, we're looking for high-low structure to build on the daily. As it stands right now, this is a downtrend on a swing chart. It's a downtrend on a closing chart. It is a retest of the lows right here. So we've got, this close open as well as the wick up into the lows here. So it's all bearish retest price action right now as it stands. But we do want to make note of what's happening with momentum. Momentum is in the critical zone, so it is oversold. It can stay here for a while. And I do want to actually, before even getting to the pivot, I do want to note that from an RSI perspective, I want to see RSI above the moving average here, which is a 12 simple moving average. That would put it back above basically $41,000. It's at $40,969. Nice. But we need to see in-trend bullish divergence starting to form. I want to see regular bullish divergence. There might, be longer term hidden bullish divergence, but for the daily, I want to see in-trend bullish divergence building. So just like we saw in-trend bearish divergence building on the entire structure within the bullish control zone, we do want to see in-trend bullish divergence building before we start looking for a sustainable trend break to trend reversal. We could get trend breaks and short-term uptrends on the daily, but until we really start seeing bullish divergence build, it's not as interesting. Now, if Bitcoin did do something like shoot all the way to the top side of the range and then come back down, that's where you're likely going to see in-trend bullish divergence forming, a trend break to a trend change. But as it stands right now, trading anywhere below at minimum that 41.8 to 41.9 at the weekly is bearish, at least for this current structure. Now, what I will say is if we do see another swing high put in right here, meaning at this 40,530, and we see price head back down, retest that lower second around 38.5 at the monthly, or maybe even get below it down into the 38K, 37.7 at the weekly, or even into that zone between the two weeklies at 37.7 to 36.2 to 3, then I would be looking at this particular high that it's putting in today, unless it does head up above it before close. This would be the criteria to break the swing chart downtrend, not a closing downtrend, at least not until we saw a low set on a close. But in this case, to break the swing chart trend to the downside, we would need to see this area taken out. That, again, I want to be very clear, is only if this is the high for today and we see a subsequent move to recapture that high in tomorrow's or the next day's price action. As it stands right now, it's playing around the lows. I would be looking for a bounce pretty soon. It is in that critical area. It's right on supports. It's at the lower second standard deviation. We see BBWP cooling down on the daily. It's 74. Under the moving average here at 82. And actually, let's go ahead and look at this on the the Bitcoin in 60 seconds chart that I typically show. Now, we're still seeing Bollinger Band expansion to the downside because Bitcoin is trading below the basis. So we will continue to see, expansion to the downside, the lower first, lower second, continuing to head down. Even though we are seeing BBWP, begin to show signs of mean reversion. Well, that is, as long as Bitcoin is trading below the lower first and lower second are going to still trading and closing, I should say, below the lower first. The lower standard deviations, lower first, second, and third will continue to head down. And then you'll see the top side of the bands or the upper standard deviations begin to curl down. You're already seeing the upper first do that. Upper second is flat. Upper third is still rising. What you'll see is the upper first is probably going to start heading down in the next close. Upper second may start to get a downside angle, and you'll see the upper third begin to flatten. Now, what this does mean is even though mean reversion is the play from the BBWP standpoint or price volatility within the bands, it can still head down and test in and around those lower standard deviations. What you're really looking for mean reversion is for, in this case, Bitcoin, what I would say is get a retest of that lower second. If it doesn't do that, regain that lower first. And then we're looking for mean reversion back to the basis. Now, the basis is right in between these two weeklies here at 41.8 to 43.2. So big area of resistance. Obviously, we saw this, on the closing high and the swing high that was just put in here back in on the 16th. And then again, the next weekly acting as overhead resistance here, starting with the move down to retest Friday of last week. So, it is mean reversion in the sense that the basis is heading down. Bitcoin, as long as it's below the lower first, can and is more likely to continue to test the downside standard deviations, specifically that lower second. Although I do think that we will start to see this mean revert back towards the basis as the basis is falling pretty soon. I'll give you my reasons why now. One, we can see that, it wouldn't take much for Stoke to get a turn up here. Now, of course, this is measuring close over close price action. So a close above 39,663 would, cross this back up. It is showing an initial cross now. It's probably going to continue with that. But until you see the K and the D read pointed up, I'm not really interested in looking for a shift. So whatever happens first, we either see a low put in on a swing or a close, or we see the Stoke turn with the K and the D read. And I'm gonna basically explain how to interpret that. If we do see the Stoke turn, but we don't see a swing low put in just yet, meaning a close above 40,150 today. But Stoke begins to turn with both the K and the D read. Well, we're waiting then for, its downside is still likely until we see the swing low locked in this case. So the swing low needs to be locked in. That would be on closes above 40,150. If that doesn't occur today, Stoke is turned up. Then we look for it to be a possibility tomorrow sometime or the next day. And even though Stoke could be turning up and indicating that momentum is beginning to shift on the daily, what I would tell you is if the swing low is not locked in by taking out this wick high, then the lower second is still the play. It's still the most likely play. And even if it's only to get retested, to retest the actual swing low. If we do see Stoke turn, the next day, if it doesn't happen today, then we're looking for this particular wick high from Tuesday to get taken out. If we do see Stoke turn and the swing is in, meaning the swing low is taken out by a closing candle above this Tuesday wick high at 40,150, then we're getting some confluence between our price action trend chart and swing fail patterns along with a momentum shift. Then the next thing to look for is, are we getting signals on lower term timeframes that are telling us that this is likely to continue up and test, somewhere around that lower first. We would also want to look for something like a confluence signal with, an SMA on RSI if you like using that. There's many other confluence signals that you can be looking for, but one of the big things that I do like is the 12-hour. So the 12-hour is what I use as the leading indicator for what to look for on the daily. And in this case, we can see that the swing low is in on the 12-hour, and that doesn't mean that price can't come down as we are seeing price head back down. But we want to see a swing low put in. We did see that on the close, um, on the previous 12-hour close versus the 12-hour candle that we are currently witnessing. We saw the close come in slightly above this 40,144. So again, the 12-hour did close above that. And it also, in this case, you're going to see this solidified a closing low, come into the bottom with a 3 candle structure, take out the high, take out the open and close here. I still want to see more personally. I'd want to see this open taken out at 40,771 on the 12-hour. That would put it above the lower first and likely right up against the basis by the time price would get there around that 41, 41 to 41.5 area to then test that swing high around 41.8 at the weekly. Now, as it stands right now, because Bitcoin did not recover the lower first on the 12-hour, that does mean that the lower second, lower third zone, I would say below the lower second, just pay attention to the close open and the swing low, 38.8 to 38.5. Below there, then the lower third is fair game. And that is coming in around 37,350 or so. So right into that weekly zone. But what I like to look for is we got the swing low locked in, come back down, look for that lower second to get tagged around that 30. It's basically 39. It's 38,995. So it's 39,000. If we see that weekly at 39,000 retested and it holds up, then we look for this swing high to get taken out at around 40,530. That would put it back above the lower first there, which is coming in slightly below that wick at 40,217. And then above there, we start targeting the basis there again at that 41.5 area. So that's kind of my thoughts on what to look for in relation to the daily. I like the 12-hour chart. I do suggest that you pay close attention to it. Same criteria, for the swing low is in, but momentum is turned against price right now. So if we do see a close on the next 12-hour above 39,530, we would get an initial cross or momentum shift on the 12-hour here. And then we'd have our confluence with a momentum shift after putting in a swing low, getting a closing low. We would just need to see it start to recover basically the lows of the range above us by taking out this open here at that 40,800. And again, this is the same area on the daily for the, it's right around that lower first on the daily. So the lower first is coming in at 40,760, and the open here is at 40,770. So this would be many confluences coming together at the same time. Swing low in, get an initial momentum shift, take out the local swing high, take out the closing swing high, or take out the close of that open rather, to then solidify not just a closing swing low, but a closing low. So that's what we would be looking for next on the 12-hour. And same criteria for RSI. You do want to see in trend bullish divergence developing. Right now, it's not even a possibility at the moment. Bitcoin would have to head back down and make some lower lows in order to get that. Now, it could get it in relation to the structure right here, but that would mean that it needs to head up a little bit more before putting in a low structure. As it stands right now, if it does head down to test in and around its current RSI low, which is coming in at, let's go ahead and look at it. This is coming in at 2570, so it would need to remain above, I would call it a 26. So let's go ahead and look and see what price would need to be in order to throw a bullish divergence, where price needs to stay above, I should say. So we'll call this a 26, and we can get that readout. So price needs to stay above a 26, and then it will have a bullish divergence available to it. And that's 36,800. So again, right in that weekly zone that we've talked about. That's almost smack dab in the middle of this weekly zone down here between 37.7 and 36.2. I believe some of you have had this number that you're looking for through other confluences, whether it's fibs or support and resistance areas on time frames that are not necessarily the ones that everybody is watching. Yes, I'm looking at you, Roca. Um, you're going to find that there is confluences in that area, right smack dab in the middle of that weekly zone. But again, Bitcoin's got to break down below the monthly support, start taking out these swing lows. And, I'm not totally confident that it's going to do that right away. I think, it's very possible that we could see a bounce before that happens. We do see mean reversion on on the 12-hour is not yet available. We do have BBWP under the moving average, but the moving average is not headed down with it. So in this case, we could see closes below the lower second standard deviation on the 12-hour. That would mean closing back below 39K and testing these lows would turn BBWP back up, and the moving average would still be pointed up, supporting a further downside move. So you'd have confluence for expansion to the lows. If it breaks the lows past it, and it's still got some juice on the 12-hour, so keep that in mind. This was it was a compression on the 12-hour. We saw compression basically right at the lows of the prior range, and then expansion through the bottom side. So that's where we saw the expansion happen, and then 2 12-hour candles down to go test that 38.5. That's what you want to see, and that's exactly what I explained to you guys. In terms of evaluating the lower second and upper second for reversal or continuation. And again, one of my favorite plays when using bands is an expansion, pop back up to the lower first, and then on the other side, expansion, come down to the lower second, and then a retest of the expansive move. In this case, we got expansion, pop back up to the lower first. I love the retest of the lower second. That's the play that I look for. If it holds, it's likely to bounce and start to create at least a swing uptrend structure, followed by a closing uptrend structure. If it breaks, then you're looking back to the lows. If those break, you're looking for resumption of expansion, in this case to the downside. So very, very simple setup, easy, high hit rate. If you understand what you're doing, it can almost be 100% hit rate. You just have to make sure that you have your criteria laid out correctly. By the way, I actually want to bring this up real quick. Hit rate doesn't really matter if you don't know how to trade based off of it, off of those signals. So it's really about how much P&L you're bringing in. You can have a low hit rate setup that you're playing, and it can still yield massive results for you in terms of P&L. It's just as long as you're cutting the losers quickly and the winners are massive. But in this case, I prefer high hit rate setups that also create massive P&L gains. In this case, I've been short for a while on price, so I have been taking profit for those that have been asking, not financial advice, but only because of covering fees and other things like that. But I still have for those that have asked, I still have the bulk of my short side position open, and I still have a swing long all the way from that was started at 26.5. You're probably thinking to yourself like, oh my God, you probably have massive fees on that. I have taken profit along the way and walked that price up for entry, but that's been a very, very profitable swing position that I would be looking to rebuild if things head down further. As it stands right now, I'm probably going to hunt another swing position in addition to that. Not financial advice again. But looking at the 8-hour here, we'll just jump into this real quick. Very clear. This swing high needs to be taken out. Again, it's the same swing high in the 12-hour at that 40,530 or so. If that is taken out, then we're looking, for a recovery of these lows at the basis, and that is coming in where 40,850. That is the daily area that needs to be taken out to solidify a closing low, not just a swing low on the daily chart. And then, of course, above there, we're looking at that 41.8 weekly recovery if it can do that. Otherwise, as long as Bitcoin is trading below the lower first on the 8-hour, the lower second is available. That's coming in right at $39,000, just like the 12-hour chart. Below there, we're looking for it to play back to the lows at the monthly at 38.5. Below there, of course, we're looking for more down to those weeklies. The 8-hour is ahead of the 12-hour, so I will point this out. Any closes above 38.8, meaning this can come down and retest the lower second here at that $39,000, and Stoke would still be pointed to the upside. We also are seeing the same kind of thing. We are seeing BBWP under the moving average, but the moving average still has a positive slope, meaning that if we did see closes below $39,000, we will see BBWP or volatility tick up again while being confirmed, and likely that 38.8 pivot would be tested. And if it broke down, then we're looking for the lows to get tested and lower. 6-hour, pretty simple setup. Same thing, same swings and everything. Now, in this case, we do have BBWP under the moving average and heading down. This is just the beginning, though. And that is the result of Bitcoin regaining the lower first and heading towards regaining the lower second and first in this case and heading towards the basis. So we have a 69, nice, under 77. That does mean that if Bitcoin heads back down to the lower second and even starts playing around those lows and lower down to, let's say, the lower third, which is coming in at around that weekly to be fair, it's a little bit higher than the weekly. It's about $100 higher at 37,869. Nice, yet again. Then I would be looking at BBWP. And the main reason I'd be looking at BBWP is if it does not get back above the moving average and turn the moving average up, then I'd be looking for a local low to get set down in that area, even if it began to re-expand to the downside. That's kind of the additional move. The other thing would be if it heads down towards the lower second, just like I explained before. This is actually at the 8-hour momentum pivot at 38.8. If it did hit that area and it holds up, then we'd be looking for it to play back up at minimum to that lower first, wherever that is. Currently, it's coming in at 39,721. Price trading just above there at 39,760. So, the pivot for the 6-hour is at 39,150. So, I would be watching that in the next close. 4-hour, we're looking at, a swing high being put in, threatening to close a closing high. Realistically, you want to see it closing below this order block candle here. This would also put in the closing high at 39,592. So 39.6. Get below the lower first, which is at 39,359. Then I'd be looking for it to play back to the lows around the lower second in that 38.5 region for the 4-hour. We can see that BBWP even is headed down significantly. This is where I would be looking for, if it gets down to the lower second or below. It's unlikely that it would turn both BBWP and the moving average back up, but if it did spike down and it does not turn the moving average back up, we're probably looking at it setting a local low pretty soon. If it does turn both of them up, then it's looking like continuation. As it stands right now, mean reversion is the play, but the play has already occurred. Now we're looking for things to kind of cool down and get some compression. And that does mean that it can very easily play between the upper second and third and lower second and third areas. Lower thirds coming in at that weekly at around 37,675. So $25 under that weekly down there at 37.7. Stoke would turn down on any closes below 39,345. So 39,350 below there. we're looking at momentum shift, but in this case, I would be using the bands. There was a few other things that I wanted to check on real quick while we are here on the Bitcoin chart. And that first part is going to be the moving averages. So we've got quite a few moving averages on the daily that we can get in here. And yeah, so Bitcoin does have a 9 under the 55 cross here. We can see that we've got a 50 simple, we've got a 34 in here, a 21, a 55, a 9, a 100, two 200s, an EMA and SMA, and then we've got the EMA 369. You're welcome, Bobby. Believe it or not, the 369, the law of attraction or the Tesla numbers or the meme numbers, however you want to use it, it is pretty funny that it works out pretty damn well. All right, so you can see there's a lot of overhead moving average resistance. The 9 is coming in at 41. The 55 being a big major moving average is coming in right where I would want to see a daily low being set, at least from the current position of price action. Kind of sweeping over the top at the 41, 5 to 6 area. 21 is, 21 and 34 coming in right around that weekly area overhead at 41.8 to $42,000 or so. This is probably going to head down into 41.8. If we do see a 21 under the 55 cross, that is a bit of a bearish signal on the daily. Over time, typically looking for when we do see that, we typically see price rise into those areas, maybe even deviate above. But it's not a given. I'm not too concerned about this. What this is pointing to is, accumulation and reaccumulation, maybe a little bit more daily distribution, stuff like that if it goes up and makes lower highs and then comes back down. But I think that's good for the longer term. In this case, Bitcoin is playing around the 100 EMA, which is coming in at that 39,300 area. We can see the 200 is coming in at 35,460, and that is just right above the monthly there. And of course, this is an EMA. The SMA, or the simple moving average for the 200, is there at 33,575, and then the 369 down there at 32,300, which 32,300 to 400, by the way, I just want to show you is this area down here. This is actually this is falling right on a daily. This was a daily distribution that sent Bitcoin into the bear market bottoms, basically right around Luna. This was a major level at the time. And then, of course, there's the daily, weekly, monthly close open breakdown to those lows and lower at around that 31,850. I'm not looking for those areas to get tagged right away. If anything, I'd be looking for a bounce from here. Maybe a little bit of a swing of the lows and then come back up if you're looking for my personal opinion. As it stands right now, I still need to see things develop. Still a downtrend, still looking for more over time. But bounce from here is not out of the question by any stretch of the imagination. We just need to watch it Thursday through to Friday's live stream. I also want to note where things are on the weekly. The 21 is coming in at the 37,220 area. The 34 is coming in at 34,500. So sweeping in just below this weekly here at 34,750, 760 area at the monthly weekly zone. Of course, lots of support in here around the weeklies just above it. So it would need to break down from there. The 55 is all the way down here at the 32,340 level. So again, right into that daily distribution area. When the 50 simple, 100 and 200 simple are down here, right in the $30,000 area to $31,000 area. We also do have finally a 100 over the 200 SMA, and the 50 is moved up over the 200 SMA. The final thing that you want to see for full trend for EMAs and SMAs is you want to see the 200 EMA above the 200 SMA. That's likely going to happen after Bitcoin puts in a major low on the weekly, whether it's a swing, on a swing and a closed low. Basically, you're going to see the 200 EMA likely head up over that 200 SMA after that's taken out, and then after the swing high at 49,000 to 50,000 is taken out. That's when you're going to see that 200 EMA really start to move up. Now, that, of course, leaves open the possibility that the 200s get tagged before something like that would happen, but I really would take things in order. 21's a major EMA. Again, if you throw on Bollinger Bands, we can get rid of the 34. We'll get rid of the 34 is probably good. We'll turn back on Bollinger Bands just so you can see the basis band is a 20 simple. So this zone between the basis and the 21 is a big zone. So if we see price close below the upper first this week and the 9, then the 21 to basis are the next big areas. And of course, they are going to move up if Bitcoin doesn't get there first. And it's around that weekly area, 36 200 to 300 to 37 200. So again, this is all coming in line with what we've talked about previously. Below the monthly at 38.5, this weekly zone is the big one. And we can see how that has confluence with everything that we were just looking at. So we've got that 37.7 to 36.2 to 3. You can see how the bands line up on the daily. You can see how this all has confluence with EMAs and bands on the or EMAs, MAs, basis being an MA. And you want your EMAs leading your MAs. 21 is still above the basis. They're likely to get a little bit of convergence here, but that also lends itself to this area being a very supportive area, not just in support and resistance, but in terms of moving averages as well. So that is about it for today on Bitcoin. I guess the only other thing that might be worth doing is pulling that bear fib on the daily just to see if we have confluence with some of these other targets. So as it stands right now, you can pull a few different fibs. You can pull a trend-based fib from the high to the swing low to this swing high there that needs to be broken. You can see that Bitcoin has come down. This, by the way, this 0 is at this swing high, which is at 43,569. Nice. And you can see how the 382 is lining up with the lower first now. Major resistance, 382, inverse 618. Depends on which way you're pulling fibs. In this case, it is a trend-based fib. So you can see Bitcoin has tagged the 618. If it does drop the 618, it's got to basically hold itself up at the lows by the lower second standard deviation, or I would be looking down to the 702 at 38, the 38,000 at 38.2 or low 38 region. The 786 is another big area that's coming in right at the weekly at 37.5. The 888 down here is at 36, 769. Nice. Again, right in that weekly zone. So we're getting confluences there. 100% of this particular fib is down there at 36,000 to 35,900. Extensions, we're looking at 33, 32.7, and then a 1618 down actually below the breakdown area at 31. That 31.8 is the closing monthly that broke down from the prior cycle lows that sent us to new lows. So big area. That 618 would be below it. I'm not necessarily looking for that until we see, we got to see the monthly breakdown at 38.5 first. There's another way to do this. You can take the initial move. There's a million ways to pull fibs, but you can take the initial move down, swing high to swing low. You can see that we are closing on the 1272, spiked exactly into the 1414. To be fair, a little bit lower. 1414 is actually at 38,635. And the 1618 is coming in at 37,300, 1786 right there at 36, 36 274. So we're getting that weekly zone right in the 1618 1786 area. The 1888 is coming in at 35.6, and the 2 spot is coming in at that weekly just below the $35,000 monthly in the upper 34,700 area to 800 area. So it's basically $35,000. It's 34,981. I believe that's what that says, unless I'm reading that wrong. Looks good. If you want to take the whole structure as well. Swing low of the lows to the highest high, just as one last fib pull, just to show you an example. 1272 is coming in at $38,000. 1414 is coming in at 37. 1618 is at 35.5. 1786 just below, coming in around that weekly. Again, 34, upper 34 region. So we have all kinds of confluences all over the place here. Yeah, somebody says hit the likes for the fibs. Yeah, go ahead. Yeah, it does help if you like. If you're not subscribed, go ahead and subscribe. That also helps the channel. And of course, turn on the bell for notifications and all that other social media stuff. Let's go ahead and pause here for a moment, give my voice just a little bit of a rest here. And I'm going to take a look at the chats real quick while doing so. We're also gonna kick on the tunes for some of this other analysis on traditional markets, Dixie Gold. We're gonna turn on a little bit of background music, as I'm probably gonna get some questions about some of it. We'll also look at ETFs here. So now that the bulk of Bitcoin analysis is out of the way, I want to leave it to you. If you have any questions, go ahead and let me know in the various chats. I do suggest for those of you that are in Twitch that you head on over to the YouTube chat. As it's a little bit difficult for me to monitor the Twitch chat. That's Landy's Crypto Corner. It's also linked in the profile on x.com for those that just joined in there. Same thing. There's no plugin right now for X for the chat side of things. So if you want to chat and you want me to see it, head on over to the link in my main profile there for Landy's Crypto Corner on YouTube. And you're welcome to chat with us here. For those of you guys in the private chat, I see that you guys are blowing it up in there, and it has nothing to do with what we are talking about here today. Yes, a lot of that is really technical. So just so everybody publicly knows, I don't have like any paid groups or anything like that. The private chat is for people that cannot access the public websites from where they are. In this case, they are restricted because of work, and it's not worth opening up those ports for those websites to be available in that particular location. So they have other methods for watching the streams. It's nothing special. You're not missing anything. Trust me. These guys are being degenerate fools over there right now. Yeah. How about we get back on topic over there, guys? Let me kick the tunes back on here. Hold on just a moment. I'm stalling to try and see if anybody has any questions. You are correct. Like legitimate questions. Let's turn the tunes back on while I read the chats here. All right. Hello, no name, Roka, Baba. Sam, hello. Don is here, hello. And Jedi is here, at least chatting publicly. I do see quite a few others in the chat over there. If you want to chat with us, head on down. Well, one, if you're on the YouTube page, go ahead and hit subscribe, and then you can jump on down into the chats. I do have that gated. You do need to be a subscriber to chat. Of course, subscribing is free, it helps the channel. but more so it's to prevent spammers from coming in here and spamming their wallet addresses and drainer links and all that kind of shit, because YouTube has horrible moderation tools. Yeah, so doesn't look like I have too many questions here, except Sam is asking for later. Uma, yeah, and Tectum. Sure, I can look at those later, but we'll get through Dixie Gold and just take a quick look at traditional markets, and then we can get to those. I will do a few alts today, so if there are, he's got two. I do prefer you only put one, but he's the only one that put some in there right now, so I will do those two. If there is an alt that you would like me to look at, you got a burning question about something as well, go ahead and ask it, and we'll get to it. Let's go ahead and continue on and just quickly go through Dixie. Dixie's. We will also take a look at I think there's at least enough low-term time frame price action on the ETFs. We'll take a look at that in just a moment. Let's go ahead and take a look at Dixie. Dixie is it's trying to hold itself up, looking a little weak, putting in highs. It did swing this high back here, did not close above that 103.69. Nice. Again, the memes are everywhere. It did reject it. It is threatening to close below the upper first standard deviation, giving us a target back down to its current wick low at 102.77, and the basis, which is likely to be in and around there. It's only slightly below there at 102.57. If we do see the basis dropped, look down to that lower first. That's going to be the big area right in our liquid zone here at 102. Basically, it's 101.94, but 102 to 101.77 to 101.80. Below there, we're looking to the lower second again at about 101.20, 101.30 area. If we do see this kind of play in the strong area or strong half of the bands above the basis, just be aware that if it does recapture this upper first at 103.27, which it is currently trading around, if it does stick above here, that still makes the current swing highs around that 103.81 to 104 area. The upper second slightly below there, it's 103.96. 104 to basically the overhead resistance here at 104.20, 21, 25 area, somewhere around there. Above there, we're looking to 104.5, and then above there, 105. So that's the easiest way to kind of break this one down. I do think that Dixie probably has a higher chance of pulling back, maybe trying to consolidate a little bit here. Pivot is at 103.64. We do have a cross down on the daily. But until we see this little top range broken down from, it could go sideways. So if it is broken down from, then we're basically looking at 102.5 to 102 region initially. Let's go ahead and look at Dixie. Dixie is what we just looked at. I want to look at gold. Gold would be the one that I'd actually want to look at here. And gold has been having a little bit of a tough time here, getting above this 2,040 bucks basically. Multiple swings come back to this basis here. If it does close below the lower second today and lose 2016, the lower second and the actual lows of this particular move from the lower high swing, higher high close, which by the way, divergence, big divergence, bearish divergence in that area. If it does take out the lower second at 2003, drop the wick low at $2,000, then we are probably looking for this to eventually work its way down to somewhere like do a replacement price, heads down while the lower third heads into this big area at 1980 to 1965. But at first I'd be looking like 1990, 1985, and then subsequently a move into 1980, 1965. You want to see that area hold up. If it does nuke through there, we're looking to mid to low 1900s, and the next big area for it to hold would be this closing zone down here, 1940 to 1930, basically. I will actually mark this because it is a zone of interest now. I'm not liking the look of price right this moment, unless I'll give you the criteria. Unless I see this $2,040 and basis recovered, and then subsequently start retesting around 2,050 to 60. Take out the swing high at 2,062 and start pushing that upper second by the highs here, which is in the 2,070 to 2,080 region. I'm not very excited for upside price action below, at minimum, $2,060 right now. I want to see it above the upper first, start pushing that upper second, come back down for support in these zones that it's rejecting from around 2040 or so, and then head back up and test those highs and higher up to that 2080, 2100 to 2150 area and beyond. But for right now, it's not looking that likely, to be honest. Let's look at traditional markets. A little bit of a pullback on Dow again here after making some new highs on Monday. As long as it's trading above the upper first, upper second area is going to be the play. As soon as it drops that upper first on a close, then we're looking for it to head back down. Right now, this is setting up a sideways and up range. As long as it's above the the lower second, and that's coming in at 37,250, and the swing low just below it at 37,122. This is more than likely to continue to make new highs. It's still trading above its prior all-time high consolidation. Did swing up, higher low swing. If it does drop this area, you're going to see the lower low swing and then start dropping this low right here at the upper first rather. The lower first is down here. Upper first is at 37,800, and then I'd start looking for the bottom side of the bands, mid to bottom side here, 37,630 to around 37,500, 4 to 5, and then down there at 37,200. That's when you need to watch that swing low. It is looking still angled to the upside here for momentum. We're looking at 37,334 on the daily pivot. We are seeing ever so slight expansion, but you can tell by the bands, the way to get aggressive expansion would be back above the current swing high structure and the upper second at $38,000. So that's what I'd be looking for next. Still looks good to keep trying up. A little bit of pullback today, not anything too crazy. We did have NASDAQ continuing its move up. Nice higher low swing. There's no closing high in here. This was just a higher low swing. So we did see a swing high, swing low, and then swing higher high after a beautiful gap up above the upper second standard deviation. If it closes here, again, the easy thing was it opened above the doji wick high. So it was like, this thing's going to go test much higher. It did hit our area 17,665. So it did hit our upside targets. We were looking for back here. We saw the 17,450. The next big area is going to be 15,500 to 7, and we basically have hit that. I would consider that target hit up here. If it continues to trade above the upper second and close above the upper second, we'll see BBWP substantially tick up. It's currently 80 over 63. Beautiful, beautiful, beautiful. Looking very good, especially if it closes like this today, even with an evening star type of a doji. Not really that concerned about it until we see the lows dropped. It could even come down and do a nice little gap fill around 17.4. As long as it regains that upper second and or the upper second gets around the current high, I'd be looking for this area where it's currently trading to be kind of the area that hangs out in for at least a little bit as volatility continues to increase. Big bad moves down if it starts losing that swing low wick at around 17,260, 17,286. So about 17,3 to the upper first at 17,2. So starts to lose that, in terms of where it is trading right now with the nice gap up, you'd lose the gap, and we'd start looking for the basis and prior all-time high to get ran again at 17,000 to like 16,700 or so. Looks good though, still good above 17,269. Nice. Again, more meme numbers. Gotta have all meme numbers across every market. If you don't have meme numbers, there's something wrong. All right. Nice gap up on SPY to hit a new all-time high. I'm moving my chart instead of drawing on it here. All right, so we've got just about hit our target area, the next big area that we were looking for. When we had last talked about this, was we had seen the 485. Sorry, we're on SPY now. The 485 area tagged, so we were looking 490 as the next big area, and it came in, between 485, 490, and take it 5 points at a time. 490 to 495, 495 to 500. I'm telling you, 5 points is going to be the play on this. And we've been accurate in that, between the 5 to 10 point range, depending on the day. Very, very, very accurate. I mean, even here on this high, when we were looking at this getting taken out at 478, so we were looking 480 to 485. We got the 482, and then we got the 485 region. Now we got the 488 hit. 490 is the next big play to 495. So 5 points at a time, as long as it's closing above the upper second, you can see BBWP expansion continue. You see Bollinger Bands already got that nice little pinch to the upside expansion here. Looks beautiful. As long as it's playing above this upper first, and that is coming in at 481, we're looking for continuation to the upside. Haven't even put in a swing high yet here on SPY. Looks beautiful. So a little bit more to go on this. Obviously a lot of hedging going on here at the highs here, but it's easy to wash people out in this particular zone. All right, 478 is going to be the upper first area, likely to remain the pivot on Stoke as well, because it's 478 today, but after close it is going to update probably somewhere around 480. And of course still strong above the basis, and that's coming in at 475 down there, so looking good still. I'm not having success with, there we go, my keyboard is just acting funny. All right, let's go ahead and take a look at let's go ahead and take a look at some of the ETFs. All right, so we can take a look at Grayscale. Nice big drawdown. By the way, so for those that are getting kind of like antsy about the outflows with Grayscale, you want to know how you're going to be able to tell when they're going to slow? Use your chart. You can see that the ETFs are having a green day today, right? So in this case, came down around the prior upside range moves. We saw the swing low down here get swung around the consolidation up and to the right. It got below the lower first here and gapped up above the on a close, it got below and closed in the lower first range, put in a swing low. Unless it closes above 36.14, or when it closes above there, that's when I would be looking for a closing low to be set. Right now it's just a swing low back above the lower first. As long as it closes here, the basis is fair game at $37. And we'll look at the momentum pivot. Momentum pivot's at 38.27. That's likely going to come down pretty substantially, especially if it puts in the swing low today. If it can close above this wick at 35.28, which, it's kind of an hour and 30 minutes and it's like right up against it. But if it closes above there, this swing low is valid. And then for confirmation, we're looking for that 36.14 open to get taken, and then 36.32 on the actual swing to go test 37. But after the swing low, if a swing low is confirmed, we're likely going to see this pivot number drastically come down and start to swing around on the daily, which means that Grayscale may bounce, and some of those outflows might still be continuing, but to a lesser degree. And in this case, we can throw some volume on here. Significant top for Grayscale here, and obviously this coincides with the ETF launches and people wanting to get out because their fees are just silly. They will adjust. They're not gonna. Seems like a deal to distribute some of the risk that they hold to other players. Of course, there's also the big news of like, oh well, we had the FTX, the bankruptcy people running it and the CEO running it, basically getting rid of their shares of Grayscale. So there's other players in the game that we're also waiting because you need the liquidity, and all of these other ETFs can absorb that selling pressure so that you can maintain price and get and extract decent value without crashing the markets. So I think it is working out perfectly. So congratulations to those of you that do hold your Series 24s, because you're putting in the work, man. All right. I don't know what you're talking about, Spin. I've heard about it. Do I know anything about it? No, I haven't really looked into it yet. So Spin is he's asking about the natural asset company. I don't know much about it, to be quite honest. I've heard it. The discussions are going on and stuff like that, but I'm not really up to date. What we see here with IBIT, which is BlackRock, we see a gap up, and that was because of pre-market. And of course, this is a response to Bitcoin also rising. So Bitcoin spot price rising. It's one of the reasons why you're going to see gaps on these charts. And in this case, go down to the hourly, and it honestly looks like every altcoin chart you've ever seen. But we're going to start looking at this as we're starting to look at this as possibly heading down further, but attempting a consolidation. It is rejecting its prior lows at around 23. If it can regain this hourly upper first, then I think it can make some headway to the upper second, start regaining 23.02 to 23.31, and then go test this swing around $24 to 24.11. If it can start breaking that, it's going to reverse trend and start, coming back to where it opened, around 25 to 26 bucks. It's probably not ready yet. It's going to be ready when Grayscale is ready to turn. That's when Grayscale starts to turn on the daily, and I really would be keeping an eye on momentum for Grayscale. So when the daily momentum begins to turn down here, Stoke, we see a daily low set, not just a swing low, but a closing low set. Then we're going to start seeing some structure, some downtrend breaks on the other ETFs, and then some structure being built out. That's probably going to coincide with, of course, Bitcoin either heading lower and finding support, and then beginning to also set swing lows and closing lows, and then attempt to get structure breaks, or in this case, downtrend breaks, a close at minimum fairly soon thereafter. So just a quick look at ETFs. Quick look. All right, so there's a few other questions in here. It says, if the fees are high, Grayscale will sell its BTC. Are they planning to reduce its fees? Well, I mean, Grayscale is not selling their Bitcoin. It's investors are letting go of shares, and they are going to reduce their fees at some point. It's a cost-benefit analysis. Like, we can hemorrhage a certain amount while these others are still on their fee structure, and then they can roll over to, that's when we'll reduce fees, is when it starts, when that cost-benefit analysis starts to reach equilibrium. And what it also allows for the market is it allows more distribution of Bitcoin across these ETFs, which then lends itself to more resiliency over time. That if there was a direct attack on Grayscale itself, for instance, in terms of they have exposure through the markets, right? And with all these other ETFs, you'd rather bleed out to them in the early days and then have real competition. I mean, they're back advertising again, so they're going to reduce fees. And for a lot of people that maybe don't understand, like, it's a cost-benefit analysis for the investors as well. It's like, okay, I can, many are in from a long time ago, so they might be getting some early, tax loss harvesting in, also that management fee, the fees on it at 125 basis points or 1.25%. They were headed down. Their fee structure on the latest, I think they were trading at negative 60% or negative 60 basis points, but they popped back up to equilibrium recently, and that's for new. That's going to attract new holders, right? But they're going to set probably a stable fee structure here pretty soon. So they were discount at around negative 60 basis points. It was their discount recently. Yeah. So they hit equilibrium, but their fees are still the same. So they're going to restructure and lower their fees. They don't really have a choice if they want to remain competitive. But it is a cost-benefit analysis kind of thing. Like, there's plenty that will sit with it because you can claim that 125 basis points against your gains. And or you're going to have to pay on what you take out just to, is that 100 basis point savings going from Grayscale to, iBit or one of the other ones, is that worth paying the taxes? Like, the cost benefit analysis for investors is going to be starting to near its equilibrium here pretty soon. And once that happens, they're probably going to lower their fees. So they're going to remain competitive. It's not a matter of if, it's a matter of when. All right, so let's look at some poo coins, as you say, as I say. So you want to see UMA? I've been looking at it. I do think that it is probably putting in a local top. Yeah. It's probably putting in a local top to then go in sideways consolidation for a little bit. As long as it's trading above the upper first at 461. I've also been trading this, so yeah, and that is the close open. So you can consider this an order block over here. So above 464, 461, where the upper first is, it's looking good. That does give it a range between 461 or 460, if you like, even numbers, to the upper second around 610. So about a $2 swing range for it to play around in. If it does start to trade back above the closing structure up here, which is coming in at 577, then we can start looking at that upper second again at around that low $6 region to almost $7 on the wick high there. Actually $7 even on the wick high. So if you were trading this to the long side, you probably traded right into my sell orders, because I was looking at some of those lower term time frames, and it was a little too hot to trot in that area. Stoke will turn down on any, well, it is actually, no, I'm sorry, it is facing down initially, but will turn back up on any close above 591. It's currently trading below there, so I would be looking for this to get a full-on Stoke cross to the downside. BBWP is maxed out. We do see that it's hard to read, but we can go back to my indicator here. It's 9,899. So BBWP is under the moving average, but volatility can remain very high because of the spread on the bands. I mean, technically, this thing come all the way back to the basis, and it's fine, and that's at $3. That is well above most areas, and it's starting to get above the breakout validation region over here. And as long as it's trading above, the upper first, it's looking good. The upper first is hanging on the lows back here from 461. So I would say that's what I'd be paying attention to. If it does drop that, it could head all the way back down to $3. Still fine. 4 hour is in swing lower low territory, so it is a downtrend, lower high, lower low, and a swing, and a close. But this is an expansion to compression. So if we do start seeing this swing high taken out at like 633, or the upper first taken out at $6, then the upper second at 640 to 650 is fair game at that swing high. Takes that out, it's back to the highs around $7. If it does take out this swing low over here at 489, then we're looking down to that $4 region. So pay close attention to this 4 hour. I do think that it could very easily reset and just accumulate and then blast off to space again. 580 is going to be the number to watch there. I would keep an eye on the pivot on the 4 hour regular Stoke. In spin, I'll go actually look into NAC for you as well, and I just remind me on Friday. I've heard it. I haven't looked into it though. Tectum is the other one that Sam was asking for. So TET is the ticker, and isn't there like a real exchange for me to trade this on? Like, is this? Let's look. I think there it's not just. Is it only Mickey Mouse exchanges? Oh God. I mean, Mexi is probably the only one that has like decent liquidity. I know that BitGet's probably the place that you'd rather be, but they're both kind of terrible. BitGet at least has a better reputation. As long as it's holding $25, looking good on the 4 hour at least. Let's look at the daily. Yeah, I mean, it could play down into 24.50. If it loses that, then we're looking for it to start hitting around 23 by the lower second standard deviation. Below there, then we're looking for support to come in somewhere around 21.50 to $19. As long as it's above this, closing above this swing low at 18.65, it's looking good. If it can double bottom on the swing here and take out this $30.15 on a close, then it would be 32 to $33 at the basis, and then from there it'd be looking probably 35 to 37.50 by the upper first initially. Breakout above there, it's right back to the highs here by the upper second, around 42 to $45. Almost 40. It actually hit 46 on that wick high. So pretty simple, straightforward setup on that one. It's just clean. About ready to turn on Stoke as well, and he closes above 27.42. So that would be today. So if it closes here, basically if it takes out this local swing high, we're looking for it to, at minimum, come up, somewhere around 30 to $32 by the basis, 33 by the basis. So that swing high is at $30.15. So I'd be looking for another $1 to $2 on top of that, and then come back to it in the 31 to 33 range. Looks good on the momentum side of things as well. Just beware that this was a trend break to the downside in terms of the swing chart, and now one of the big things is there's no real closing lower low. It's more of like a consolidation low. This was more of a consolidation low, and then consolidation high, and then if it puts in a consolidation low here, then you're looking for this just to ping pong its way up, eventually hitting like $50-$60, especially with a structure like this, and where it's I'd be putting at minimum like 100% markup from here if it does complete a structure like that in the longer term time frames. So that's just like back of the napkin math. If you really wanted to know swing low to swing high, I'm actually curious now. Let's do this just to satisfy my curiosity here. Yeah, no. In fact, 1272 is even further now. $58 to 66. Pop that all the way up to $80 at the 1618 to 90 to $100 around the 1786 1888. I could see that with a structure like this. I could see that very easily being hit, provided it hangs out where it is and doesn't break down. It's not just them, Sam, and it's not. It's they are only accounting for like probably $1 billion to $1.5 billion in outflows from Grayscale and other alts. They didn't have a lot of left anymore. I mean, Solana was their biggest bag, so I really wouldn't be looking at it like that. This is just the market needs to cool down. I mean, like, this is everyone. This is all of the degens. And believe it or not, degens are still running these markets. So just because these big ETF players have massive inflows and outflows, look, they're doing it mostly OTC. So, they're having as minimal price impact on the market as you could possibly have, right? So a lot of like, oh, it's Grayscale, they're dumping on us, we were supposed to dump on them. No, it's all the bigger guys that wanted to dump on Wall Street are actually dumping on Wall Street, taking profits at the highs, letting things cool down, buying support, and guess what? It's going to turn around, and when the real run kicks off, it's going to be much bigger, I think, than maybe even I'll be expecting. But yeah, it's not just. There's no one explanation. It's fun to kind of go in that direction though. Like it's just them, or they're the catalyst, or this or that. A lot of it has to do with a combination of things. Fees on Grayscale, things were overheated on the dailies all the way through the weekly and monthly for Bitcoin, and when Bitcoin heads down, everything heads down. Initially, Bitcoin consolidates on the highs, everything starts to really pump and rip because profits are being taken and put into those, and then you take profit on everything. So you're very late here, Cheryl. Yo. We're already past all of the analysis, including some extra analysis on ETFs. And even some crap coin analysis. So yeah, you're like right at the end here. It's all good though. Throw a like on the video on your way in and out if you feel so inclined. For those of you that are hanging out in the chats and or just watching, because there is quite a few people watching right now. There's 8 people officially in the chat that are actually chatting. And then there's another 12 that are not. For those 12 that are not, if you'd like to jump into chat, go ahead and sub, and you can come on down and let Cheryl know what you think about the 49ers, apparently. Yeah. No, yeah, we got, for those that are in some of these other chats that are all over the place, I would actually suggest that you come on over to the YouTube channel and chat in there. It's just much easier for me to see what you're saying, and there's no easy way to aggregate x.com chat right now, so if you're in there, I can't even manage it, I don't think, unless I go through their very cumbersome back end. Yeah. Gross, cumbersome back ends. Yeah. What do I think? Oh man, somebody took a like away. Oh, now I'm sad. I said, hey, can you give a like? And they're like, no, you know what? I did like it. F you. It must have been because Cheryl said something about the 49ers. Or they were Eagles or Cowboys fans or something. Sam chiming in with BitGet. What about BitGet, buddy? Oh, I think Sam's running a little behind on. He might be a little behind on the live part of the stream here. That's okay. BitGet or Bitmart. I already went through it though, so. Am I a 49ers fan? No, I'm a Buffalo Bills fan, so I'm sad perpetually. There's only sadness. Yes. We only know, right and wrong, and things often go right with us while, being wrong for winning the game. Man, that wide right kick. What a thing. Of course, people are disgusting human beings and like threatening the poor guy for missing the kick. But yeah. And then somehow everything's Josh Allen's fault, even though like he had a great game. Why didn't you hit Steph Diggs underneath? The play wasn't to him. It was a shot call to the end zone for Shakir. Like, we've been watching that play all year, and it was open, but Josh got run into by one of the best guys switching up to D end, and was it Jones shoving Dawkins, who's also a freaking badass Pro Bowler, shoving Dawkins right into Allen at the end there, throwing that was the defensive play of the game, because that Shakir was open. And it was not just, oh, Josh screwed up and it was a bad pass. Like, no, he got hit on that throw. So good on them. I mean, they earned it. They earned the win. And Steph Diggs dropped that fucking bomb, man. That sucked, huh? You're welcome, Sam. I think you are running behind on the stream. It's all good. Dex Pools is probably the best for Tet since it gets longer history. Got a longer history on you. Okay. I mean, for Tet, I mean, the analysis that I just did is valid. You don't really need to go looking at the monthly for some of these moves. And if Bitcoin heads up, it's going to head up. Yeah. Yeah. But yes, I agree, Roka. Yeah, Cheryl, you're a San Francisco fan. I think we got a Cowboys fan in here somewhere. But it is funny because like it seems like all of the fans of other teams are like, man, we love the Bills. The Bills are great. Like it's kind of crazy. Got Cowboys fans telling me they're rooting for the Bills. I got San Francisco fans telling me. I've got at where I currently am at. We've got LA fans telling us that they wanted the Bills to win. It just seems like a lot of people are tired of the Chiefs at this point, and I mean, I get it. I'm just happy that New England isn't doing well anymore. Spent 20 freaking years with Brady stomping all over our division. So respect the guy. I think he's the greatest quarterback that ever lived. But man, screw that team. They just stomped all over us. And it gets tiresome after a while. Like the Green Bay Packers. Wait, so you're a San Fran fan, but you also root for the Packers? I'm confused. Yeah, Don, I'm not really interested in the CME gaps. They don't tell me anything that I don't already know or that we haven't already accounted for. The only time that CME gaps are going to make a lot of sense is if that is the overwhelming narrative. But yes, I mean, we have looked at them. I am aware of where they are. And if you go through the history on CME gaps, what you're going to find is that many of them remain unfilled, especially when markets begin expanding to the upside. So in this case, I can look for you if you'd like. It just does not do anything for me. It doesn't give me any kind of edge. When you look at the weekly, we have a bit of a gap fill here. There's a little bit of a gap at 34,000. There's a tiny gap. When you're looking at filled, this is not, this 19 and to the wick low here is not, this is filled. There is nothing that remains that is not filled at this point outside of this tiny gap right here. This gap at 2021, this is filled. It doesn't really do much for me. But yeah. And if you're looking at like the like this gap over here, or if you're looking at like a weekly or something versus a daily, the weekly is what matters when it comes to bigger gaps. And yeah, I mean, they get filled. But even those weeklies on the daily are often, you can come down here and you can mark them off. You're probably, referring to this gap here on the daily. This has been filled out. I mean, this gap up was in response to coming down to fill this gap. So you run away from that gap. That just makes sense from the order book perspective. Gap down, fill, move on. Fill this gap, bounce from here, move on, that kind of thing. But realistically, I would use the weekly to really ascertain. This gap over here is filled. That daily gap around 20 is not really. That entire range there was a quick fill down to the gap below and then right back into range. It's gapped up back into range. So gaps, look, like gap plays, for those of you that are joking now about the CME gaps and then also talking about the CME gaps, what I want to let you know is they're not going to give you where a gap comes in is not going to give you any more edge than you're already going to have on your chart. It's on 3K. There's a gap at 3K. There still is, yes. All right. Spin said, so Spin must be a Cowboys fan as well. Is hating the best quarterback ever in New England. Man, you guys didn't even really have to play him. You didn't have to play Brady until he went to Tampa. Yeah, don't mix in crypto with sports because that's where the likes are disappearing. Yeah, you guys are just up there like, fuck you. Excuse my language. You went almost all stream without swearing. No, I come from generally the most likable fan base. The Bills fan base is pretty awesome, with the exception of the assholes who are screaming at Gabe Davis and those who made death threats to the poor kicker there. Yeah, I mean, to be fair, he should have made the kick, but it doesn't warrant death threats. I don't really hate any team. It's more of, I mean, just New England was kicking our asses so much for so long that it's nice to take a bunch of division titles away from them. And now we're the baddies. Now it's everyone in the AFC East is like, fuck the Bills, fuck Josh Allen, they suck, we're gonna beat them. You know, that was really the whole season, was being assaulted by mainly Finns fans, because they had that big game against the Broncos, and then they thought they were hot shit for a while, only to really fall apart. We're into full-on sports talk mode now. Cheryl says I'm surrounded by Cowboys fans. Oh no. Quit watching when Romo got screwed out of his starting position. I've become a fan of players, not teams anymore. Yeah, I'm a big fan of players as well. Of course, I'm a fan of my team overall. Yeah. Bitcoin. I didn't look at Bitcoin dominance yet. No, we can take a look real quick. Whoops. There we go. Nice little reversal on the daily. You know, probably headed back up to that 52 to 53 area. So this area just above the basis band. If it does get above the upper first, then I would be looking for next target. You know, it might pull back from here, but next target's going to be the 52 to 53 by the upper first, 53.20. Above there, we're looking to 54 to 54 and a half at the highs again, maybe 55, maybe a run to 55 again, and then take it from there. Momentum looks good coming off the lows. Getting mean reversion back to the basis, you know, above 51%, even for today. At least it's still got momentum to the upside. So looks good for right now. Sam was saying that, that it's on Bitmart and BitGet exchange. Yeah. I mean, it's on MEXC as well, where you're probably going to have larger pools of liquidity there as they B-book against you. But because it is across various exchanges and it is, it was heavily traded for a long time on Uniswap. And there's a lot of good distribution with holders from what I remember. That MEXC's still gonna have to, even if they're B-booking, they're gonna have to at minimum keep pace with the actual underlying spot price. Any team, huge fan of Josh Allen, but never dig the Bills. The Bills are a good organization. Obviously, I've been a fan since I was a kid. but they've always been a very good organization and a good fan base. Even though I've moved all over the United States, I've only become a more hardcore fan. I'm not the biggest Cowboys fan. No, they trounced on my Bills in 2 playoff appearances. 2 Super Bowl appearances, rather. Oh god, now we're getting into teams that people hate. I see Seahawks in there. I don't mind the Seahawks. I don't think the Bills have played them in a very long time. So I had no reason to build up animosity towards them. Anyone looking for a bounce on the, like I said earlier in the stream, kind of already bounced off of the low side structure. If it's going to get continuation, it's going to stick above the lower first here and head towards that basis and upper first. So we need to see it maintain above the lower first at 34,350. If it does drop it, then it's going to be back to the lows around 39 to 38.5 and the possibility for more. If it does regain around $40,000, 40,100, it needs to take out the wick high at 40,500 to go test 40,800. If it does recover that, that's the daily. It could set a daily low, and then we're probably looking to the upper second around 41.5 to 6, which is the next big area to look for. Wait, that is the daily low. Let me look. Is that the daily low? Yeah, that is the daily low, is the upper second right now. So it's the lower first that it needs to get above at 40,800. My apologies. So the upper first is around the lower first of the daily, so it needs to recover that, and then it can go test the daily closing low side area, which is that open at 41.5 to 6. Hey, Bobby, can you guess where I longed? Take a wild guess where Landy put his long. Here, we'll go to this chart and see if you can guess. Where do you think my entry was? You're in the zone, by the way. Mm-hmm. $12K. No, I for this particular move down, I had orders set at the 38.5 to 6 area. So right in the zone, because we talked about it. We knew it's likely to get front run. And at minimum, it was, if it did pop back up, great, but front run that weekly and monthly support and then go down and take the weekly. 38,491.93. No, in fact, for the exchanges that I traded on and trade on regularly, there was a little bit of a price premium versus spot. 27K. No, I had, that's the swing long area was 26.5. I was buying off that area. Remember, that was the area that we were looking for to spike before the move up here on this big long rip to the upside of basically 100% gains. 26.5 was a little more like 90%, 88 to 90% gains, but 26.5 was the swing long. And then once we hit the highs here, took profit and within the range, was playing the range with that position. So it has been averaged up, but it's well below support still. So a lot of profits taken off of that one. And that's just, that's a simple play. And then that swing position will eventually just become so close to the range that it becomes a scalp, and a new swing will have been built. Yeah. Well, I mean, so the question that came from outside of the public chats here was, why are you so confident in buying off of that level? Isn't that knife catching? Well, no, because I'm entering on this level as with the goal of there's two ways that this trade could go, right? Right now it's in profit. If Bitcoin puts in a swing low and then a closing low and then gets a trend break, I'll look for a higher low and I'll size up that position from there, as a medium term swing. And then if it starts to break out, towards the highs and higher, then it's a longer term swing trade. But the plan is, if it heads down to my areas of interest, is I keep building that position on the way down. And then when we see a low put in, on a longer term time frame than even the daily here, then that becomes a size up, size up substantially to bring the entry down, let it rip. The other thing is if it gives me options, because I can play it as a scalp to the upside to the range lows, which I decided to sit on it for now, because I already had a scalp. I opened a swing. I opened one position with the goal of building it, whether price heads down further and or heads up, gets a trend break, and then higher lows its way out. So that's a swing position. It's got funds allocated to build that position specifically and manage that position. And then I also took a couple scalp opens in that zone as well. You had mentioned that you took 2 scalps from there when I was talking to you the other day. Why would you take more than 1 scalp? Because of the size of the orders and slippage. Yeah. And then one of those scalps, I took profit on one of those scalps pretty quickly, yes. And the main reason why is that'll cover fees for both of those scalp positions. So then I'm left with a swing and a scalp. So the scalp, if we'll get normal TP levels and normal stop loss levels, and then the swing trade is there specifically to be built out. Yes. All right, so it's pretty. Bobby says it's been pretty easy to long. Clear risk reward as a scalp, and also with the potential to build a swing. Yes, yeah, it's essentially what I'm talking about. And no, you don't need a massive account to do either one of the things I just explained. You can do it with a smaller account on lower leverage. It's just a matter of identifying what you want to do and why, and then building it around your risk tolerance with a risk management plan. No, because that's basically signals, and I don't give signals. I give you levels of interest and help you determine direction in the markets and what I'm looking for in terms of specific criteria that price needs to meet in order to get continuation, in this case to the downside, and or begin moving back up and trying to break trend. It's all conditional, and when you set conditions, you can trade those conditions. So that's where you need to build your own trade plan that is specific to your risk tolerance. Yeah. The 2-day, yeah, it's lower second is basically right above the weekly here at 39, 3 to 5 as price oscillates around. When price was trading more towards 40,500, the lower second was at 39.5. But as price has moved down a bit, the lower second it's only going to slightly adjust. If we see the lower second closed above today, then lower first is available as an upside target. If that area has gotten above, then it's the weekly, and that's 41,150, probably 41,000 after close today to 41.8 above there. Take out this little swing at 42,160 to go test the basis at 43 to the weekly at 43.2. Take out that swing at 43.5 to 6, and then we can start targeting that upper first at 44.8 to $45,000. But other than that, I mean, I'm not looking for too much more until I see those conditions met. And of course, if it closes back below the lower second and or it closes above and the lower second moves into this support, then that, as long as it's trading and closing below the lower first, then the lower second to that lower third zone are fair game. And right now it's lower second's probably going to be in and around this 39,000 to 38.5 at the monthly, so weekly monthly zone, and you're going to see that lower third ending up in that in that weekly support zone down there. So just pretty easy stuff to understand. And we do see confirmed expansion, so this is going to expand the lower second and lower first, second, and third pretty quickly over the next few closures. Now, the big thing to keep an eye on is closes above 40,325 are going to turn Stoke back to the upside, and that number is probably going to be much closer to price action. So probably in and around its current low side structure on a close open basis when it does close and open later today. For me, at least. Yeah. Good question. Yeah. I agree. It's in bouncy territory. That doesn't mean that it's going to reverse its trend, but it is in bouncy territory. If it was to go up into range and make a lower high, you're probably looking at distribution back down into these supports here that Bitcoin's currently playing around at 38.5, and then 37.7, 36.2, 35K are fair game from there. If we were to see it pop back up, swing to like the upper first, upper second area, put in a lower high, and then break the lows. That's their criteria, though, because a lot of people mess this up because it deviates, comes back in a range. If it pops up and starts to get a trend break, puts in that trend break and then puts in a high, of course it would, if it puts in a high any lower than the swings up here or the closes up here, then it's a lower high. But it's a trend break higher high than the most recent swing and closing lower high. So you do have a trend break. Right, so you have to, what you got to look out for is for it to come back down into higher low fashion, because you get a trend break and then you start a new trend. So higher high as it relates to this downtrend, and then a higher low, and then you look for that higher high to get taken out for continuation. So a lot of people will goof that up, and they're looking for that, first, let's say it was to spike all the way up at the 45.5 and it pins out, right? And then puts in a high and comes back down. Well, the criteria is now it's got to go down and take out this wick low, if this was the case, right? If this is the low at 38.5, then you're looking at distribution, right? Then you're looking at distribution into these lower levels if it doesn't try down here first, right? I'm going to be quite honest with you. From the look on the monthly, I'm just not. Look, the monthly is so clean and so clear. If January closes like this, we're going to see that that upper first, which is currently at around 34,000. It depends on where Bitcoin is trading, right? When Bitcoin is above the upper second, its upper first was at was at 35. Coming into February, we're likely going to see this up at that 35 level. So, and like I pointed out, and I've been pointing out just about every live stream lately, is the first bear market lower high that's painted is always run. And then every time that Bitcoin has run it, doesn't matter, you know, it's always occurred just before expansion on the monthly or just after expansion. This time it was just after expansion. Run the bear market lower high, specifically the first bear market lower high, pull back into the upper first standard deviation area. That is the criteria. We have now swung that high. The only other thing to be looking for is wherever that upper first is, if it begins to fall towards it. If it does close below the upper second, in this case at 41,200 this month specifically, then we look to wherever the upper second is next month. And then if it drops it on the timeframes lower than the monthly, then we're looking for the upper first as being the biggest zone of interest. And it's likely going to come right into some of the support areas that we're talking about. So don't be surprised by any of it. I really wouldn't be surprised by any of it. I know a lot of people are looking for 30 and under. And to those I say, good luck. I mean, I would love to see it. But that is not the play from here. Not yet, at least. Not yet. Is it available? Yeah, I mean, the basis is down here. It's under 30K. Basis on the monthly is at 26, 760. Likely to be somewhere around 28 to 30 bucks. 20 to 30,000. Sorry, 28 to 30,000 at the close of the January candle. But a lot can happen between now and then too. You know, Bitcoin is in a position to bounce. I'm telling you that it's nearly there. It hit its monthly. It was a perfect retest. I mean, look, guys, it does not get much more clean than this. We had these. This is the same chart that we've had for a year or more painted on here. And I mean, look at the test of resistance. Beautiful, beautiful test. I mean, even spiking up into the weekly after getting above the monthly. Perfect test of the monthly weekly zone. I mean, this is just so clean. It's so beautiful. And this works. I mean, as you've seen, it works. It just works all the time. It's not magic either. It's just how order books work, where interest is going to lie is in historical price data. So, and the major levels are going to have much more significance, your longer term levels, your monthlies and your weeklies. I know people like the in-between timeframes, you know, between the monthlies and weeklies, or between the weekly and the daily. And yeah, you know, you can get some edge there, but I mean, these markets are pretty much run on the weekly versus monthly time frame. And then from there, monthly, 2 month versus the quarterly, 6 month and yearlies. So $30K buyers, the same as 3K buyers. 16K buyers were the 3K buyers. Yeah, I mean, he said I like that. Bobby says absolutely correct, sir. You know, it is a viable target, but it's not the first target that you should be looking for, right? Like if you're looking directly to 30K, then you're kind of ignoring everything in between, and possibly setting yourself up for, you know, really missing out on a lot of really good price action. It's like for those that are up only, like you missed out on like a bunch of shorts that are making a lot of money, like, or a lot of Bitcoin, depending on how you're trading, right? Like up only people, I don't get either. Like this is a trader's market. If you're not trading what you're seeing in front of you, then you should not be in the market. You should be an investor. and the price of on a day-to-day basis should not matter to you. You should be investing on a consistent basis on the lows. That you should be able to do simple analysis where you can identify major lows on longer term time frames, and that's where you buy, and that's you hold until you see major highs on longer term time frame basis. And that's what we're seeing on the monthly. The monthly could turn on Stoke at the end of this month. We'll talk about that as we see the close coming into February. Yeah. Well, Sam, we're already bouncing. We've seen a bounce off of these important levels. If it breaks down below the monthly at 38.5, then I would be looking for a bounce somewhere around the weekly in those lower term time frames, right? But prior support is likely to flip to resistance. So until we see a trend change form on at least a medium term time frame, then we're not really looking for too much in terms of the upside, right? At least I wouldn't be. This is still a downtrend. We do have the etchings of a possible trend reversal, right? We've got the downtrend after failing at the weekly at 43,200, right? So it failed right there at the weekly, and then downtrend, right? So we've got this swing low to this swing low to swing high to swing low, and then it comes back up and it breaks above this area on a close, but it has not closed above the wick there at 40,327 on the 4 hour. What you're looking for is on a closing basis, this is a closing higher high. So this is a downtrend break on a close. And what you're looking for to develop from there is a higher low as it relates to this lower low over here. Otherwise, this is a deviation. It's a trend break. It's suckered in longs, and then you round it down and you take out the lows and you flush them out of their position. $37,600 is, well, the weekly's at 37.7. And that does line up lower seconds at the monthly at around 38.5 to 6. If that area's dropped, lower thirds down there at the weekly at 37.7, if that's what you mean. But, this is a trend break on the 4 hours. So the first thing that you should be looking for is for it to hold support around the lows and try to higher low its way out. But as it stands now, just to give you basically what I'm talking about here is we've got, just even in this trend alone, right? We've got the structure on a swing. So, you need to see this, it's got the trend break. So it's got to stay above, the at minimum, the monthly here at 38.5. Come back all the way down to lower second and then try its way up, to 41.8, something like that. Or, it could even do a shallow correction here and hold the area here in and around the basis to lower first and then try up. But that's a new form, that's a new trend forming, and that's when you need to put, you need to look for that trend to sustain itself and work its way up the time frames. And at minimum get a low in on the daily and then a trend break on the daily, which right now is not even close to doing that. I wouldn't worry about SFPs, Bobby, on any of those time frames right now. Meaning, when I say that, I mean that I wouldn't be worried about them in terms of trying to interpret price action. We already have all the information we need. They're not going to inform us any more than with any more information than we already have. Yes, it's interesting that they're massive SFPs, but they don't change what we already know is happening. If there was something different like what we saw back on the lows of the cycle, that's different. But yeah, I mean, you're correct, but it doesn't do much in terms of at the moment. I don't want you to focus on it because I don't want it to set your bias. Let's put it that way. So I would steer you away from that. Yeah, this would be the first high of the move. Remember that. So that's the other thing. And Sam, to answer your question, no, I'm just giving you an example of this is a trend break, and the first thing that you look for is either you look for a higher low from here. After you see a trend break, you look for a higher low. It doesn't mean it's going to get one. Yeah, I mean, it's a big fat high across all those time frames, bud, including the monthly. You know, and it doesn't, you know. But the thing is you got to remember, this is the first high of this particular move up. And this move up is from the low. I mean, the high side of the move was 31.8. Low side of the move was, 20. On the higher low was 26.5. So there's plenty of room for price to move in a very wide range. And I'm still biased towards this getting a bounce sooner rather than later. Doesn't mean that it won't distribute. Get lower highs and distribute down, or it goes into a absolutely boring sideways period for an extended period of time. And then the other thing that you must be aware of is that it could just get absorbed and leg its way up to very, very deep upside targets. So you still have to keep all those doors open, but it all starts with understanding that trend on something like a 4-hour needs to start leading into the 6-hour, 8-hour, 12-hour daily. And of course, I want to remind you guys, the 12-hour is a good bias breaker because the 12-hour can give you clues on what to expect for the next daily. It's not always going to be 100%. You need to keep an eye on those lower term time frames, but it's a very good indicator of where things are headed on the daily. Sam, what I'm referring to is trend, and you need to see trend form. Like, we haven't even seen a closing low set, and we haven't even seen a swing low set. Swing low's got to close above 40,000 something on the daily. Swing low will be set as it stands right now on any close above 40,144. Or 150 for today's candle. Now, if today's candle closes like this, that criteria actually comes down to the close of this candle from yesterday, because it's the close open now. If we see a close above 39,878, which is the close open, let's say this prints a red candle today, the close open here then becomes the criteria to set the swing low. And then we need to see this swing high from today taken out to then become a closing low, as it will lower the criteria from this candle all the way up here at 41,550. So your criteria will change close over close, but that's how you would set a swing low. I mean, today, to set a swing low in today's candle, it needs to close above yesterday's wick high. So that would be this guy here. So today's candle would need to close above 40,144 to set this low as a swing low. Now, if today's candle closes red like this, then the next day that opens, being the Thursday candle, When that opens, that criteria moves down to be the close open. So to set this swing low, we would need to see the Thursday candle close above 39,878. Now, in order to set a closing low from there, we would need to see it at minimum take out 40,150 and or take out 40,530 to set the closing low. So that's just to even set a swing to a closing low. But it all starts in the lower term time frames, right? You need to see at minimum, you should see a trend break on like the 4 hours. So we can just take part of this trend just as an illustration and say, okay, from here, we've got, it depends on if you want to take that swing or this swing. It doesn't really matter. We have a potential to do so right now, right? So we saw a close above this high on a close. So this close came in at this closing high came in at 39,955 with the wick of this particular closing high structure at 40,144. Number sounds familiar, doesn't it? It was yesterday's close, right? So we did see that area closed above. So we have a trend break on a swing and a close. Now, what you need to look for is a higher low. Whether that happens right here where this arrow is on this current low side structure at 39,650, or comes lower down to like the lower first, which is at 39,325, or it comes down to the lower second, doesn't really matter. And this is at 38, 5 to 6. Retest the lows as long as it doesn't break down below the wick low at 38,501. It has the potential to set a higher low swing and a higher low close. Specifically, as long as it's closing above 38,807, then it has a chance to set a higher low swing and a higher low close. If it does that, then the criteria becomes this high right here at 40,530, which again, that's the wick high that needs to be taken out if we get a bearish candle today to set the daily swing low, and then would need to be taken out to set a closing low structure. I hope that makes sense. Does that make sense? And that's how you build trend, because then we'd have an uptrend, basically. That's what I'm trying to say there. Oops. Let's do this. So you'd be looking for something like, it doesn't matter. Lower first, lower second is kind of my favorite. We'll split the difference. Say it comes down here, and then we'll say, then it's got to take out. It's basically got to take out this high right here, and then we're about to get memes, and then oh look at that, it's a Z. Where's my puzzle piece? We have puzzle pieces. And then, then you've got a nice reversal structure. In fact, it's what I'm painting here right now is a inverted head and shoulders. And then you can get measured moves off of it. And like if this was, say, a head and shoulders or a tilted head and shoulders, it doesn't really matter. Because it's about the head portion of the head and shoulders. It's all about head, man. And easy way to do that is just take the close here. You'll get a pretty accurate evaluation of that particular setup. So, upon breaking it, and the neckline, and look at that, just so happens to be the upper second standard deviation. But it's basically you're looking for a trend reversal pattern to form, and right now we have a trend break, so be on the lookout for higher lows, but that doesn't mean that they're going to happen. That's why I say everything is conditional. Everything is conditional when you're looking at this stuff. So right now, bears and bulls are waiting, because when the trend is clear, never mind. when the trend is clear, no one's in fear, right? But the trend is your friend until the end of the trend. And right now we have a trend break, so it's technically in between trends. So it's either going to resume trend to the downside by making a lower low, or it's going to try for a higher low, and then it's still in between trends, and then it's got to take out the higher high to then go make higher highs and have a trend reversal, or it could just go into a sideways consolidation, take out the lows, and continue the downtrend. But the trend is your friend till the end of the trend, and when the trend is unclear, everyone's in fear. So we're in that stage right now because the trend is unclear. We have a trend break, so everyone's in fear, which also means you just look for the consolidation. It's either going to make a higher low, take out the higher high, or it's going to be a deviation, take out the lows, and then you're looking for continuation. But the longer that this screws around, let's say it does make a higher low and then just pins out sideways, that's when you just play the range, whatever breaks first, the higher high or the lower low. It's easy. Easy stuff. Most people just overcomplicate it. And remember, when we're talking about trend, it's all trend as it relates to support and resistance, and then support and resistance and trend are what make up a volatility when moving from, moving through supports to the downside, to the further downside supports, or moving through resistances to further upside resistances, and in a quick manner is volatility, and that all creates momentum. So there's your 4 key pillars of trading. I hate that one song cuts short. Just sounds terrible. Sounds like I'm skipping the song. Which, I mean, to be fair, I probably should. But yeah. Hope that helps, Sam. He did say it makes sense, but I hope that the additional explanation after that makes sense as well. Yep. Bobby says, from a trading perspective, I agree. This is not any criteria for me, at least, to not enter a trade because of that information. Okay, I think you're still referring to the SFP patterns on the longer term time frames. Yeah, as you know, doesn't do much for me in the sense that it doesn't change our opinion of the analysis longer term. Now, what I will do, Bobby, is I will be looking at, when the monthly close comes in, we'll be revisiting the 4-week, 3-week, 2-week, and weekly charts as it relates to the monthly, and then of course preparing for the quarterly, February into March. Yeah, because the quarterly is going to be a big one. So yeah. Bond market, I can take a look at the bond market. We're not going to do it today, maybe Friday. You'll have to remind me though. Yeah. Do I think, just my opinion without looking at the chart, I think that it's in a quarterly topping pattern for the bond market for yield. Yeah. Which means, by the way, that does mean that it could still spike highs, because a quarterly is a long time frame, but I do believe it's in a topping pattern. Yep. But yeah, just remind me on Friday, and I could take a look at bonds if you would like. Sam, don't worry about whether it's a fake out or not. These are all things that people worry about and talk about as key talking points for YouTube and crypto Twitter and like all these things, and like market maker bullshit. Like, look, there's guys literally in the other chat that are licensed market makers, nothing's fake. They're all fill-in orders. So it's not a fake out. It is a matter of if you're looking at it as coming back into range, it wouldn't be considered a fake out. It would be considered a deviation. A lot of the terms that crypto Twitter and even in markets in general, TRADFI as well, a lot of these terms are really just easy ways to explain and get engagement, and easy ways to explain like why something happened after the fact, and usually used by players bigger with a lot of liquidity in the game to influence the social discourse around it. There's no such thing as a fake out. Price really goes there. Fills are really happening, so in terms of I'm not getting on you for calling it that, but I want you to understand why these things are called what they are, generally speaking, from somebody who's got some experience with this. In industry, it would be considered a deviation of the range. Some on the outside of the industry would refer to that, and some that are stupid within the industry would call it a fake out, like as if it, a fake out implies that it was a move that somehow was an anomaly, but also implies that it wasn't real. So that's why I don't like using that terminology, and I think that it's derived from amateurs within the crypto space that have money and liquidity that want to move markets. That's really when it started to come back into prominence. But the term that you're probably referring to is a deviation of the range, if I had to guess. And it's all purely a function of profit taking and ripping through the books, looking for liquidity, both to the upside and downside. And what I've been talking to you guys about for many of you for a very, very long time is something that you need to understand about trading is, we can look for targets, but you're only as good as the accuracy of the targets that you are looking for, but they all must be conditional. And it all starts with what I just showed you earlier with trend. So the conditional targets, when you are able to set conditions, things like deviations and targets that are way out of the scope of what you might be looking for, none of it affects your trading style, because you're specifically condition driven. Kind of like if any of you are familiar with programming languages and you have if then else statements. Well, that's basically what trading is, except it's a bunch of if then statements. If price breaks this level, then I'm looking for this level. And that's the condition. And you can use the if then else. If price gets to this level, then I'm going to do this. Else, if it breaks it, I'm going to do this, right? Like, it's all conditional and very programmatic. So that's one of the reasons why it lends itself so well to algorithms, trading bots and stuff like that, because you can set the conditions and you can be very successful. Essentially, when you're setting limit orders, you are setting the conditions. You're setting, hopefully, your limit and a stop, and then when, at minimum, you're doing a market, and I hope you're using stops. Your liquidation is not a stop, by the way. Immediately, liquidation. Yeah, that's my stop. No, that is not your stop. That's how you help the market seek your liquidity of your entire account. Get all that extra liquidity in there. Yeah, I agree. Yeah, if you're a day trader, you're trading these reversal moves on probably, you're checking down the time frame. Still higher time frame derived, but I as a day trader looking for this trend reversal here, higher high, higher low, and then boom, come back, hold the lows. This gave you many opportunities to fill, and then bring it back to resistance, and then now it's testing the lows over here of this particular low. If it holds, then it's got to put in a low on the 15-minute, regain the basis, and so on and so forth, and then start moving back above $40,000 this last swing high in the 15-minute to go test the top side of the range. But and then the if then is this low side structure is sitting right on this high at 39.5. So if it breaks down from there, then there's a little pit stop around 39.3, and then it's the lows at 39, and then it's the consolidation is of this low side structure of this downtrend on the 15-minute is that 39, 38.8. Below there's the 38.5 and lower. So you're playing trend, support and resistance, volatility, obviously, expansion, compression, rejection at the upper second to expansion to the downside, rejection at the basis. That's all trend, right? So, but it expanded right into what is a local support. I mean, there's two lows over here, there's a low here, there's a high here. So if this support breaks, then we step it down, and the next big area is 39.3 to 39, where we see another big horizontal zone. So I mean, it really is fairly simple. It's just a matter of identifying this stuff, right? So we've got this zone here. You can even widen it to take the two lows because it is kind of a double bottom area. So this is a big zone, and then there's this zone down here, right? Where we've got a cluster of rejections and support being held. Below there is the actual lows. And then you can, you've got zones for up here as well. Right, so got this little zone up here where we saw the highs put in. Oops. Yep. We have this zone, this high side structure here was deviated into the high above it, and then seen as resistance, right? So you can mark up your chart to your heart's content, right? And you're gonna find confluences all over it, right? But it's all trend derived, and then historical support and resistance. Then that creates volatility within those zones. And then when you get highly volatile moves into a zone, if it breaks down, you're looking for continuation to the next big area. Deviation would be dipping below the zone, regaining it, and then coming right back into range. That would be your deviation, which I think that's what Sam was referring to. Some people call it fake outs. And fake outs, deviation, it's essentially people are referring to the same thing, but there's no such thing as a fake out. You're actually grabbing liquidity. So that would be the easiest way to evaluate that stuff. What are my personal thoughts? My personal thoughts are it's breaking down to the zone we just talked about. So it's literally in the zone that we were just talking about, 39.3 to 5. Like, if that breaks down, then we're looking 39, and then the lows at 38.5. Yeah, and it's getting expansion to the downside. It's bearish in terms of its structure right now. 30 minutes headed down, volatility's headed up, hourly's probably headed down while volatility moves up. but it's a retest of the lows until proven otherwise. It's got to break them. On the hourly, if it drops 39,000 at the wick lows, then it's the lows, right? But that's how you define it from like the 15-minute. You just take it one step at a time. And I personally like the contraction rejection at the upper second while it put in the high, and then next candles kind of bounce around. So the entry here is the rejection to expansion, and then rejection at the basis was the entry for this particular move. I'm already in a swing short position, so I'm not, I already did my scalping this morning to the long side. The other day it was to the short side, so I only have enough time to get in a set amount of scalps. I already scalped it down to the range at the lows, and then I scalped it back up to overhead resistance, and I have a swing that I'd like to build. So I would like it to come back down and help me build that swing position. That's what I'd like. Doesn't mean I'm gonna get that. So if a low is set and then it does a trend break and we look for higher lows, I'll just start building the swing position off a higher low on the daily or something. But as it stands right now, we don't have that. We don't even have a low yet. Not even on a swing. And just to kind of reference, you can see how this wick low to this wick high zone is the liquid zone. And you can observe how this stuff reacts by looking at volume too. So, and recall that just below it at around $39,000 was the highest volume we have seen. We're likely getting into the latter part of the day where you have all the ETF filers filling their coin orders. So, likely to see some bigger volumes start to come in. Sorry, had to handle something real quick. Yeah, I mean, it's in an area of interest, so a little bit of bounciness here and there. If it can regain that lower first at like 39.6, it has the potential to start setting a low in this liquid zone and then come back to it later. Yeah. Possibly. So, are you guys at the OTC desk today? Yeah, okay. Okay. I agree. Yeah. That is something to be aware of. A lot of public probably doesn't have access to that stuff. I know that Arkham is, I guess, one of the first to aggregate the wallets for some of the bigger players. At least I believe. There could be others. I just don't know. I'm not familiar. Somebody said funding has dipped negative on most exchanges. Probably. It's been pretty hard sell-off. Looking at OI, it is, around the support zone. Again, call back to where price was trading on derivatives in this zone on the daily. The relative price is for the amount of OI is around the 31.5 to 31.8 level. We did get a substantial markup with that same amount and less OI because of spot buying in the 38.5 monthly that was just tagged to that 35 monthly, which is this zone right here. Can look at who's driving the market, and it should be CME on top of Binance here. They need to get a little bit more up there. I don't like that Binance is catching up to CME. You want the professionals running this market. They will catch up though. You can go look at the ticker buy sell ratio, and we can see that it is headed up on the daily for right now. We did see it hit that 0.88, but that was before the new high. So we wanted to see it back around that area. We did get it the other day. We do have a bit of a divergence in ticker buy sell ratio, so it's also needs to paint a low first on the daily, and then we can look for possible for more in that direction for more substantial bounce, but not anything crazy right now. Nice volume coming in here though, right in the zone that we talked about. So yeah, trading really is dead simple, isn't it? It is, but it is and it's not. Like, if you have a good foundation in understanding trend, I know guys that just trade trend on longer term time frames, and they do probably better than most than most people. Naked chart trend, yeah. I mean, they mark it up, but yeah. Jimmy, yeah, Jimmy's one of them. My actual trading charts are, just volume, bull bands, and then I mark it up. Because as long as you're taking the 4 keys into account, trend, support, and resistance, and then you can do fancy stuff, and you can find liquid zones, and where's your volume coming in, so where most of the orders aggregated, that kind of stuff, yeah. But it's getting kind of late for me. I need to go get some lunch. I want to thank you all for hanging out with me and listening to me ramble after all of the initial technical analysis was done. I appreciate you hanging out. And I will have a staring at charts video again tomorrow. I hope that you guys watched the one from yesterday, because there was important stuff that I was trying to point out for today that we did talk about today, but still worth understanding how we arrived at some of the analysis that we got to today. I'll follow that up with a pre-recorded video for sometime tomorrow after close, and then Friday, of course, we will have the live stream. Remind me, for those of you that wanted me to look at bonds, remind me to do that. Yeah, so I appreciate you guys hanging out with me. I'm gonna leave the stream up for just a bit here for those that like to hang out after the fact and listen to some tunes while they wrap up whatever charting they're doing at the computer. So we'll give it about 9-10 minutes, might be a little less than that, about 8 minutes on the timer. And I'm going to let you go. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and of course, as always, stay safe. With all of that being said, Landy out. Take care.